We're looking at Disney here on the weekly chart. You can see a big red candle coming in on the week, and that is because of the big red candle we had in here today, down around $9 and some change from yesterday's close, down almost 8%. That is coming off of that bad earnings miss that we had this morning. So we did beat EPS in here by about 4 points, 4 cents, but we still missed revenue 22.4 compared to the projected 22.8. So that's where all that came about. Obviously, guidance and things like that all obviously came into play as well. So overall, you could tell that they were kind of pricing in this move that we had in here, just with that huge run up that we were having. It was just too good to be true, right? Because I mean, you got to think that we started off in here on the week. We're trading right here, right around those 111, 112s. And obviously, we broke up and we were up in those 116 handles as early as overnight, or I guess as most recent as overnight in here. And then obviously, once the earnings came out, everything just tanked. So, where does that kind of put us here on this overall weekly chart? Well, we are looking at this 9-day EMA as our big kind of resistance in here. We're not really worried about this 111, the 113, these, which were previous as resistance and support. We're just going to watch this moving average in here, this blue line. It's currently trading at 111.50. We're going to watch this, and we're going to watch this 200 SMA in here. We almost went down and touched it in here today. It's trading at 103.94. That is going to be our worst case. It looks like we are going to end up having another support down here right around that 106. That was a nice spot for us to bounce off of coming in at very, very early this past year, January. So that is going to be an area that could be a spot for us. You can see right here, it was a resistance here in May. So that's why we picked that 106, couple touch points in here. But if we do end up breaching that, then this 200 SMA is going to be a place for us to get a nice bounce, I believe. If not, then it's really no man's land until you get down here right around this 97.57 area. So we're kind of trading in between these two moving averages. That's basically going to be our main resistance and our main support in here. That is what we're looking at. So we're going to see what happens as we continue on throughout this week. So we only have about one more trade, not about, we do have one more trading session left in the week. So we're going to see where this candle closes. And we're going to see if that move that we had midday, we're going to see if that does hold. If not, then we're looking at 106. If it does hold, then we're going to be slowly climbing our way back up into those 110s. And then hopefully we're going to hit that 9-day EMA in here soon. Now, as far as our overall net flow in here, obviously it was bearish and it stayed towards the puts the whole day. We did get a little pop in the calls there, but the puts still outweighed everything. Your volume went to the puts, your open interest went to the puts, everything went to the put side in here. So that is, you can look at that as a bad thing or a good thing, right? So you can kind of interpret it however you want, but when you see everything go to the put side, the first thing should say, okay, that was a big, big down move that we just had. But all of a sudden, once the volume and the open interest starts coming in hard on the put side, that is when we start to think, okay, well, now is everybody starting to load up to the calls here? Are we going to get bullish, and are we just kind of hedging ourselves with those puts? So that is kind of how you want to look at things, because you don't want to just play into the move, right? There's always more to it. So there's always things to kind of be aware of, and you're trying to paint this whole narrative using all the information and all the data that you possibly can. You're not just going to look at the daily volume that happened today and go, oh, guess what? It's red candle. The net flows to the puts. Therefore, I'm going to get bearish. Well, no, because if you would have done that midday, you would have got burnt, right? All that theta would have ate you up. All the volatility got sucked out. And we had that pop. So, or it wasn't really pop. It was a little bit of an up move in here. And you would have got burnt, right? So you kind of want to paint this narrative with all the information that you have. We're going to see the price action and things like that. We're looking at our options chain, trying to figure out the skew and then go from there. But all in all, what we're looking at in here, 9-day EMA sitting at 111.50. We're looking at 200-day SMA at 103.94. We're going to see how this weekly candle ends, and we're going to see how we open up next week and see if we can continue to kind of grind this out, little consolidation in between these two moving averages, and then start grinding it out in here to the upside. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.